The Fed's forecasts are still remarkably optimistic.
All these numbers they threw out are fantasy land. The unemployment rate's fantasy land. The rate at which inflation is going to come down is fantasy land.
It feels like global inflationary pressures have the upper hand.
Fed rate hikes just take a really long time to impact the economy.
I just wonder whether we're going to look back and say, we were in a recession. We're already in a recession.
There's a new study by the World Bank that says the globe may be headed towards a recession next year, along with a string of financial crises in emerging markets.
Fears of recession hovering over the world once again. The World Bank has warned that the world may be edging towards a global recession.
Yes, you heard it right. Recession 2022 has begun and we are inching towards the worst crash ever. Michael Burry has one of the most talked about investors in recent months. He's been suggesting that he believes the market is headed south, and Michael Burry just sold it all. Everything, indeed. Every single investment he had. But what does this mean for regular investors like us? This is something we would like to look at further in this video. Hello investors, and welcome back to Finance Insights. In this video, we'll go over exactly what Michael Burry has been saying on Twitter over the last 2 weeks, followed by a look at his 13F filing to see what we can learn from it. Michael Burry is certainly not afraid to share his thoughts and opinions on the state of economy on his Twitter page, interestingly titled Cassandra, a Trojan priestess who solely made true prophecies but was never believed. Anyways, he's consistently hinted to a massive stock market meltdown in recent months and feels we're not even in the middle of it yet. But perhaps more fascinating than histories, Michael Burry, as an investor with over $100 million in assets under management, is required to file a 13F report every quarter, indicating what he's been doing with his own portfolio. As you may have noticed, his most recent 13F filing has obviously captured the attention of the investing world. So we all know the story up to this point. Perma beer Michael Burry tweeting about how he was right about inflation, how the market was bound to crash due to the Fed's incompetence, and how it's going to grow a lot worse than anyone expected. However, the market has risen significantly in recent months. The S&P 500 is currently up roughly 17% from its June low. This would generally prompt many doomsday forecasters to go into hibernation, but we are not seeing that from Burry. In fact, he's doubling down on his prediction that the stock market will continue to deteriorate, consistently referring to the current market performance as a short-term bear market rally. On July 22nd, he recognized the resemblance and bounces during the tech bubble crash. He's currently tweeting, "A Nasdaq bull market because it's 20% from its low. Who thinks this stuff up?" The Nasdaq repeated this 7 times after 2000, falling 78% to its 2002 low. He said, the S&P 500 finished a 22% 2-month surge, while the Nasdaq completed a 43% rally. But the bottom post-world calm in the late 2002, the S&P had fallen 42% and the Nasdaq had fallen 48%. It's interesting to compare that feeling to today, because many news headlines suggest that the worst is gone and we are back in the bull market. Clearly, Michael Burry does not believe so, and strangely, his most recent 13F filing backs up his claims. For those who are wondering what a 13F filing is, it is simply a filing made by large-name money managers 40 days after the end of the quarter that reveals us their stock portfolio at the end of that quarter. So all the big names like Warren Buffett and Charlie Munger are involved. Bill Ackman, Mohnish Pabrai, and Guy Spier all have won. And clearly, Michael Burry does this for the sake of this video. Guess what? Michael Burry's 13F revealed in quarter 2, he sold out of every single position he held at the end of quarter 1. At the conclusion of the first quarter, he owned 11 equities, including Google, Meta, Stellantis, Booking Holdings, Warren Brothers Discovery, Bristol Myers Squibb, and others. He also had a put option position against Apple. By the end of quarter 2, however, every single one of those roles have been eliminated, and just a little fresh investment in Geo Group had replaced them. That's your catchphrase. Michael Burry just sold it all. To be honest, this fits right in with what he's been saying about the stock market and the economy for the previous 3 months. He's been suggesting that he believes the market is headed south. So if he truly believes that, it makes sense that he has liquidated his investments and returned to cash. So his deeds correspond to his words. But what does this mean for our regular investors like us? Because of Michael Burry, many people have recently sold off proportion of their holdings. Many people are swayed by fear and seek to sell. There's also a Twitter account called Michael Burry Stock Tracker that has 44,000 followers and promotes the concept of simply imitating Michael Burry's transactions. Unfortunately, you can't draw much from them since, while being value-minded, he's not always focused on the long term. He's not even focused on the medium term, and his positions are always focused on the short term. The only time 13F are valuable to investors is when the super investor is investing for the long run. Why? Remember that the 13F filing only offers us a portfolio snapshot at a specific point in time. You are aware that businesses close on the 31st of March or the 30th of June. If you follow the 13F of someone like Michael Burry, the portfolio might change 8 times between those dates. As a result, the information you do receive as a long-term investor may be riddled with false signals. There's a probability that the Michael Burry no longer owns Geo Group. It's unfortunate, but it's true. In the larger scheme of things, 13F information from people like Michael Burry signifies very little and should not be acted upon. When reading the 13F filings of someone like Michael Burry, you must take them with a grain of salt. In general, 13F filings are still wonderful sources of information, especially if you follow value-oriented long-term investors like Warren Buffett. Changes in 13F filings are particularly interesting in these cases because it is likely that the information will still be entirely valid by the time it reaches you, and for many years to come. Examine Warren Buffett's portfolio history via his 13F filings. His top 10 stocks, there's a continuity in his holdings over 3, 5, and 10 years. Little has changed over time, and when something changes, the changes usually last. When you compare Buffett's 13F history to Michael Burry's, you can observe that there is no pattern to his portfolio dating back to Q4 2018. As a result, we as investors can take very little from the data. However, aside from the short-term nature of his investing, another reason to be hesitant to use any of Michael Burry's 13F data is that Michael Burry himself is a bit of a loose cannon and can stray from the traditional tried and true Buffett-style investing method that we all follow. He is very analytical and still very value-minded, but he also makes bets that others would not. So while he is highly amusing on Twitter with his market commentary, he is not an investor to follow at the 13F time, and in all honesty, it should not be surprising if his stated portfolio is radically different from the one we see now in another 3 months. That's exactly how he approaches his investing. What are your thoughts on Michael Burry's tweets? Are they likely to come true? Definitely, do let us know your thoughts and opinions down in the comment section below. Thank you for taking the time to watch, and of course, if you love this video, please leave a like, please subscribe if you want to see more of these videos. We'll catch you in the next video. Goodbye!